This conference will now be recorded.
Okay, we're in the accounting cycle trying to get to step 7, preparing financial statements, and then of course closing the accounts. We started off at 1 and 2, analyzing transactions and making journal entries. Then we went to steps 3 and 4, posting to the ledger and preparing the trial balance. We're at steps 5 and 6 now, making adjusting entries and adjusting the trial balance. What you have to keep in mind is that the main goal is step 7, preparing the financial statements. There may be 10,000 journal entries a month in step 2 that we have to worry about. When we make adjusting entries is at the end of the year. There may be only a couple hundred adjusting entries that we make. So these regular journal entries are more important, and so that's why I delay. The other reason I delay is that typically when we're making our regular journal entries, you have the numbers right there that you need to utilize, and you get your type and you make the journal entry. A little different with adjusting entries, because as we work with adjusting entries, you got to get the type and then you got to calculate that number. And so that's why I pull it off to the side. But I don't want us to lose track of the fact that step 7 is the key step. Step 5 is a little more difficult at times because you're not told exactly what the accounts are and what the numbers are. But don't lose track of the fact that step 7 is our most important step that we're working on. Are we clear on that? Good. You answered all these questions, Dawkins?
Hey, Preston, I have a question.
Yes. The for the other groups, yeah.
I just passed some multiple choice questions.
Oh yeah, no, we haven't did the multiple choice yet, but
How y'all gonna do on the attendance quiz at the end of class if y'all not working ahead?
oh Lord, oh
Professor Boy, I got a question for her. So, okay, my question is, you know how there's like a fiscal year and then there's an end of the year? Like, do you have to close out accounts at the end of the fiscal year or at the end of the year?
Okay, typically a calendar year is a 12-month period that ends on December 31st. If your year end does not end on December 31st, such as Texas Southern University and all the states, they all end on August 31st, that becomes a fiscal as opposed to a calendar year end. And yes, if your year end is August 31st, you close on August 31st. Most companies are December 31st. But in Texas, we do, well, because of, it's a municipal system and it's a lot of work involving closing. And so a lot of time people say, well, hey, I want my holidays free and clear. I'll close in August when it's hot and I can't do anything else. Then I don't have to go through all of the extra work that's required to close. So December 31st is a calendar year end. Any other year end is a fiscal year end, and you must close. When you're doing your financial statement, this is how I expect them to look, including the calculation of the income tax. If you happen to have a loss, as we work through, then that sort of changes that. Assuming you got income, you can get a refund of taxes previously paid. So instead of having a tax due, you'd have a refund. So you're going to have to make that determination. So everyone, including the students who will get a study problem on, the non-A students will get a study problem on Thursday, to turn in for those 20 points. then this is how your income statement begins to look. You don't have to go down here to earnings per share. You just got to get through income taxes. Statement of retained earnings, it looks like this. But on that balance sheet, you were told and you're supposed to turn in the balance sheet for year one. That's your starting point. And so you'll have two balance sheets, year one and year two. Any questions? So those financial statements are the key. You got, and so you will see how to get those adjusting entries in there.
Yeah, you kind of lost me a little bit. Sorry. So we turned in. Are you talking about the 40 question problem we turned in before?
That's right. That's year one.
Okay, and then we're making
Year,
adjusting entries.
year two.
Oh, year two is a whole new set of problems.
Yeah, but it comes on year one. So just like in your exam, you had to put the beginning balances in, you got to put the beginning balances in.
Oh, from the problems we did before, and then we have another like 25 or 40 problems for year two. And then,
And looked at
I
it
don't
yet?
understand that.
well, no, I ain't look at it yet. That's all I'm asking.
Well, okay, I don't think it's 40.
I
Okay.
don't understand that. Like, well, okay, so that was my question. When you were talking about like putting in the balances, like, I mean, sorry, the balances in the T accounts before like our actual questions. Were we supposed to put that like in the T accounts first? Like, I'm kind of lost like with the whole year one, year two. That's kind of confusing me a little bit.
You put the year one numbers in, then you go to year two. If you got a bank statement, what you have in there on 2019, in 2020, on December 31st of 2020 will be your balance on January 1 of 2021.
Okay,
You understand
I think yeah.
that? What you got in your bank account on December 31st
Mm-hmm.
of 2020 will be your balance on January 1 of 2021.
Oh yeah. Okay. Because it's like it's the day before that kind of like confuses me with the whole December and January, but they're only a day apart. So I get it.
Good, okay. So it's good. That's good. You know, because that could be an issue, but it's just that okay. This year's over. You got some new, some new items coming
What
on. Let's look
what
at your
page?
grades. You got period one grades. They done. But if you look at that grade sheet, the period one grades are there, and now the period two grades are on top of that. So you got period one grades and period two grades. How are you gonna get your total points?
Submitting that the thing you're supposed to turn in on Thursday.
No. When I send you the spreadsheet and you got period one grades and period two grades, how will your total grades be determined?
You would average out the two grades, right?
That's correct.
Yeah.
Now I kind of add them together, so.
Oh, my bad.
That's okay, because that leads to the point. Would you want me to forget about period one and just add period two only for you?
No.
That is, you're supposed to have 200 points by midterm for A. So would you want me to just to add period two, or would you want me to add period one and period two?
Both, please, because we need as much points as we can get.
Okay. That's the same thing with those, your problem and those accounts. And the first account is cash. So do you want your new cash to include the old cash? So that's all we're talking about. Okay, so let's talk about adjusting entries. Hopefully I've laid out the context. And on a sidebar as a context, we're no longer talking about how long the virus is going to last in terms of months or whatever, but it's how many years it's going to last now. And so you've got to adjust to what we're doing, how we're learning, the way I'm trying to get you to think and learn this way, because it's not, and especially as crazy as some people are acting, they're not going to go away in 2021, and it may not go away in 2022 and 2023 unless a major miracle occurs. And so you got to be, if it stops earlier, fine. But if not, you got to be able to operate in a virtual environment in terms of some of the major jobs that are going to be out there where you make money. The money is going to be made if you can operate virtually. But, some people have to go into the warehouses for Amazon and places like that. People have to do that. I have students who work at Amazon. And so some people have to do that. Just give yourself a choice of whether you go in person or whether you work from home. Now, when we're recording adjusting entries, cash never involved in adjusting entry. It may be in a preceding entry or a succeeding entry, but cash is never involved. So that's your first rule. An adjusting entry is going to involve one income statement account and one balance sheet account. So there's two accounts, but you got to have one from the income statement and you got to have one from the balance sheet. Is that clear?
Professor Boyd, can you say that one more time?
Okay.
Not the part about cash being never what's it called, a part of the joint entry or adjusted joint entry, but the one that you said the last part. Sorry.
Okay, let me see if I can get to it. I'm looking for the chart of accounts, so pull your chart of accounts out. Closing entries. Come here, chart of accounts. Balance sheet, balance. Here is a chart of accounts, which you're supposed to always have in your lap as you take the class. Here are assets over here, balance sheet accounts here, income statement accounts here. So Cameron, every time you have an adjusting entry, you got to have one account from the left and another account from the right.
Oh, okay. Thank you.
And it can't, and for the adjusting entry, it cannot be cash. So that was a good question, Cameron. And I was pulling, to get this. So one account over here on the left, one account on the right.
Okay, I only asked because I was looking at the entries that we did yesterday, and I was in your office hours, and I thought for a second you're showing me that you put cash in for the adjusting entry, but it's the succeeding entry.
Yeah, it's either the succeeding entry or the preceding. So you can have a preceding entry or a succeeding entry where cash can be involved. But when we get to the adjusting entry itself, we would not have cash.
Okay. Thank you.
Okay. So let me just see if I can paste this here. Okay, so you see I pasted the chart of account. Now, as you work with adjusting entries, you got to first of all determine what type is it. Is it a prepaid expense? Is it unearned revenue? If it's accrued revenue, or is it accrued expenses? You got to determine which one it is. If it's a prepaid expense, there's always a preceding entry that ultimately involves cash. But when we go to the chart of account, prepaid expenses start at supplies and basically goes all the way down to equipment. Okay, so the preceding entry is going to involve this, and then when you get ready to credit, you're going to involve this. Your debit is going to be to an expense over here, such as depreciation expense, insurance expense, supplies expense. So when we are dealing with adjusting entry 1, it's going to be the assets are overstated, the prepaid expenses. So when you get to the chart of accounts, what is overstated is going to be the supplies, or the prepaid insurance, or the auto, or the equipment. Okay, so it's going to involve one of those 4. And you're going to have to credit something over here. You're going to credit the prepaid insurance or the supplies, but if you got auto equipment, you're going to credit what? The accumulated depreciation, because we want to know what the cost is. And the entries that you're going to be dealing with are what? Depreciation expense, insurance expense, supplies expense. Is that clear?
Yes.
Is it clear to anybody other than Cameron?
Yes.
Okay. Now, if we are dealing with unearned revenues, that's going to be a preceding entry. When we have prepaid expenses, we had a prepaid entry where we bought the item and then we made the adjusting entry. When we get to unearned revenues, there's a preceding entry also, because what? You got some cash in advance. And your adjusting entry is going to involve debiting that liability and crediting revenue. So we go over here to the chart of account. What entry am I talking about? What accounts am I going to be talking about on number 2? Don't make me do all the work.
It'd be accounts payable through
No.
No? Okay.
Liabilities.
We're concerned in that entry, we're concerned about unearned revenue.
Unearned. Okay, so it wouldn't be all of them. It would just be
And sales. Okay, I'm gonna bold it for you. So if you got your, so what you're going to be doing. So what we're saying is the accounts involved in the adjusting entry is going to be that liability, because it is now earned in the revenue account. Okay. Then we just said, if we were dealing with prepaids, these are the accounts that we'll be talking about. And with the prepaids, it would be depreciation expense, or it would be insurance expense, or it would be what? Supplies expense. Okay, so I'm pulling those accounts out for you, just bolding them.
okay. So
Now,
for number 1, sorry.
go ahead.
So I was gonna say, okay, so for prepaid, it would be all of those assets from supplies down, and then the
Right.
other ones that you put on the revenue, the expense side, I think for number 2, it would only be sales and the unearned revenue.
So for number 2, only unearned revenue and sales in the adjusting entry.
Okay.
So let's see if we can do this. AJE2. Where else I'm gonna put AJE2 at? Dawkins.
Pardon me, sir, I couldn't hear you.
Yeah, I'm talking to you.
What'd you say?
You know, get out that car and get in your class. So AJE2 was Roman numeral 2. Let me put Roman numerals here. Things I prepare for you all.
Well, we appreciate it.
At least a B student. Now, when we get to these, it's going to be AJE what? I mean, yeah, AJE what?
1.
1. Y'all really going to be making A's on that quiz later on today.
'Tis the goal.
AJE1. Well, yeah, adjusting entry 1. Now, how's that?
That was
I'm
much
sorry,
needed.
can you go back to the chart? Because I need to look at it again so that I can like
So
see
I have a
what.
copy of this chart.
Oh, okay. Yeah, I see.
So I'm just saying, when it's a type 1 adjusting entry, I got 1 by the accounts involved. Now, you got to.
Oh, okay. Okay.
Copy. When it's 2, I'm giving you the type of accounts that's involved in the AJE and the regular entries. And we'll do an example in a few minutes.
Right. Okay.
Accrued revenue. We've already done this one before. So when we do the AJE, we could put accrued revenue, but I just put it in the account receipt. So this becomes AJE 3. And what else am I gonna bold for those?
Unearned income?
No.
Mm-hmm.
And it couldn't be unearned income because we already got a balance sheet account. So it got to be back here on the right.
Oh, you know what? You're right. It's an expense account.
Say what?
It's an expense account.
Pull out your journal entry types and go to 15, Ms. Dawkins.
That wasn't Dawkins. That was Williams. Dang, her giving you the wrong answer.
Wow, that's crazy.
Oh, hold on. You said 15?
Yeah.
Oh, sales.
Mm-hmm.
Okay.
So we're finding that.
Can you get them all right?
Well, the thing is learning. So, your questions have been good because it's, I hadn't planned to do this. I planned to pull this up, but then to continue with this. So the questions are good. That's how we learn. Okay. So I don't have any problem. Learning is the key. So we see that sales can be involved in two types of adjusting entries. Okay. All right, team 4, what about accrued expenses type 4? Where are we going to be at, team 4? Since y'all got these, since y'all have these. Where am I going to be on my chart of accounts?
Hold on, let me pull it back up. No,
Yeah,
we
give
did.
us
It's an expense, I know for sure.
Wouldn't it be accrued liability?
Yeah, we'd eventually credit a liability. So if it's salaries payable, so this is going to be AJE4. Wait a minute. Undo. Well, IB. And I use the Roman numerals so as not to confuse it with the regular numbers. So we have a salaries payable, or we can go down here, we could also have an accrued liability. JE4B. So salaries payable is the most common accrued liability, but there are other accrued liabilities such as taxes, interest, all of those. And a lot of time we just put them here. You can lay them out separate. You can just put them here. So since those are the balance sheet accounts, then what expense accounts we will be utilizing? That is, what accounts on this other side are we going to use? Or an AJE4?
I know I used
office
office
salaries.
salaries expense
Yeah.
a whole lot.
So we'll go up and go to sales salary first. So it can be here.
Office salaries expense.
Office salaries expense.
Professor, I have a question, because while we were doing the assignment, so the thing, like, it's a 650, it's also office salaries expense, and
I
the
just put it in here
654.
twice. Just use
Oh,
the first one.
okay.
Sometime we might have an interest expense in here also. I think that's most of them. So hopefully now this gives you a lot better focus in terms of what accounts we're talking about. So we weren't talking about the accounts at first, but now we have working together. Said if we say it's a prepaid expense, we know what the accounts are going to be involved. If it's a prepaid, well, an unearned revenue, we know the couple accounts that are going to be involved in the adjusting entry. Okay. Okay, so let's see if we can work one again now. I guess well, let's do supplies because I expect everybody to be able to do supplies, okay? I expect everybody to be able to do an adjusting entry for supplies. So let's see, 1, 2, 3, 4. Let's look at number 3. J&J Shoe Company in 2017 purchased supplies on account costing $15,000. At the end of the year, supplies on hand total $15,000. The first thing we're going to do, so we see C, the first thing we're going to do is to go up here and say, we got prepaid expenses, and we're going to make our preceding entry. Okay. So when we make that preceding entry, we're going to debit supplies. What was the amount?
15,000.
Okay. And supplies.
Hey, Professor Boyd, I had a quick question about those T accounts.
Mm-hmm.
So, does every type of adjusted entry, do you use two or more than one different year? Because like I see you have 2017, 2018.
Yeah, we're just showing it what would happen the next year. But you just have one account for supplies and one account for supplies expense. So in actuality, the accounts keep going.
So you don't need to label them 2017, 2018, and so on?
It's probably best to say, okay, supplies, this is what happened in 2017, then this is what happened in 2018. That's probably a good idea.
Okay.
But however it works for you.
Okay, thank you.
So remember, you can't memorize this, you got to think it. So right now then, in the supplies account, how much do we have in 2017?
15,000.
15,000.
15,000. So that's how it looks now. So we have the preceding entry made. Then it tells us what? It says, what about supplies?
That we only have 5,000 on hand, which means that
We only have 5,000 on hand. So we now need to make on December 31st in AJE. Now, we may have had 10 of these entries all during the year, but now we're told that we have 5,000 on hand. So now we need to make the adjusting entry. So let's go back to the T account for just a second. And what it's telling us is that, okay, we only got 5,000 in the account now. So I need to make an adjusting entry and put it here. That's going to make this 10,000. That's going to make this 5,000. So what must the adjusting entry be?
10,000.
So the adjusting entry must be 10,000 because I got to get the account to this. So now we're ready to make the adjusting entry. So in the adjusting entry, we must have both a balance sheet account and an income statement account. What's the balance in the income statement account is coming first, or what's it going to be?
Supplies and supplies expense.
Which is 10,000. And now we need the balance sheet account since it's going down. And that's going to be 10,000.
Hey, so I had a question, not particularly pertaining to this problem, but on the homework, So I understood making the journal entries, but
Yeah.
when I went to go post on the ledger, I didn't understand the point of posting the journal entries to the ledger because nothing balanced out anyway. But that was just me. So that's why I was wondering for the homework, did you expect it to be posted to the ledger or is it just adjusting journal entries?
You should post the preceding entry and the adjusting entry to the ledger, because that's what's going to happen in practice. So didn't we put the 15,000 in here?
Yeah, but if it's okay, I get what you're saying. I get what you're saying.
Because you got a problem now where you're going to have 3 or 4 of these entries in this account, and then you're going to be told, okay, only this amount is in here at the end. So you always get in the habit of doing that, making your postings. So we make the adjusting
Can you
entry.
explain this point one more time? Just the point you just explained right now about the balancing out the ledgers.
Okay, I'll go back to that in a second. Let's look at our chart now. When we have a prepaid expense, we have a preceding entry, which is typically going to be either a 7 or a 12 where you buy the asset. But then notice in the AJE, it tells you to debit the expense and credit the asset. So it's telling you what to do in terms of debiting the expense and crediting the asset. Notice that? Yeah, it's telling you when you make the AJE, you're going to debit an expense and credit the asset or accumulate depreciation in contra asset. Do we see that now in terms of explaining what happened on the one? Now, what's the question once again about the T account?
The one you just explained, like about balancing them.
Okay. In our example, this T account originally had 15,000 in it. An adjusting entry is made, it now has 5,000 in it. And when we get ready to go to 2018, we're going to start off with $5,000. Okay? For
Yes.
supply, okay? So this is a balance sheet account. It carries over to the next year.
Yeah.
For supplies expense, there's going to be a closing entry that closes it out. And we will start anew with the expense. So this is why before I was closing them out. So the balance sheet account carries over to the next year. It is a permanent account. The expense account is a temporary retained earnings account that is closed out each year. So we make the adjustment, then we're going to close it out. So when we get ready to go to 2018, there's nothing in supplies expense. So let's see if we can go to, that was, we're on which number 3, let's go to 4. In 2018, the company purchased supplies paying cash in the amount of 5,000 and purchased an additional 10,000 on account. At the end of the year, supplies is 4,000. So we got a few more things. But now in this problem, we have a beginning balance, and we also have a cash purchase and a purchase on account. So we have a beginning balance plus 2 additional preceding entries. And then we have a ending entry of how much is in there, 4,000. So when we work the problem, now, this is 5 and 10. Okay. Now, the journal keeps going. There's a 2017 journal, and then there's a 2018 journal. So delete all of these out. So there's going to be a 2018 purchase like this. Then there's going to be another one where we buy supplies and we credit account payable. Okay, so this one was 5,000. So remember, we're in a new year now. And we have here, this is 10,000. And maybe, let me just see. Let's put these rows in here so we can get separated out. So that would have been made. So this is 2017. Now we're in 2018. Let me put some more rows down here. Okay. So we've got our 2 purchases now, and now we need to post these. So we aren't worried, right now about the credits, but we got to go to supplies. And now we've got to put 5,000 in here, the new 5,000 we bought. And we've got to put in the 10,000. Okay. So when we add all of these up, we have what? 20,000 available as supplies now. And but it tells us how much is on hand at the end.
4,000.
Got 4,000 in supplies on hand. So what must the AJE be?
16,000.
With conviction. 16,000. And so when we go up here and we get ready to make the AJE, we're going to debit supplies expense. Because we're always debit an expense with this AJE. How much did we say? How much did you say, Dawkins?
16. Wait, hold up. Oh, wait. Yeah, 16,000. Just
What we're going to credit?
supplies.
Okay. So we could have had 50 of these entries up here, okay? We only got one of these to show how much is left. Any questions? Any comments?
This is making a little bit more sense now, because I did not know what you were doing at first with the different years on the T accounts, but now I see that's flowing into another problem, kind of.
Mm-hmm. If you like your transcript,
Yeah, good
Semester
comparison.
after semester after semester. Okay?
Mhm.
A's after A's after A's after A's. Right?
Correct.
But you don't throw off some of those other years, do you?
Say that again.
You don't throw off your freshman year, do you?
But no.
So on your transcript, you got your grades by year. You know,
Wait, so in that case, this should never be a time, cause like if you was to give us a set of questions, this should never be a time where we have to go back to a previous year and like put something in, since well, I'm trying to figure out how I can ask this. We wouldn't have to ever go back. Like, say if we just got done with 2018, we don't have to go back to 2017 if it's the same company, do we?
no, you wouldn't go back.
Okay.
Okay. So hopefully, once again, adjusting entries, they're there. They're made at the end of the year. You got to think, but they're not that difficult. And so in your study problem, then you pull all of this in, okay? So you begin to pull all of this into the, so you can't just have these by themselves. You got to have this comes in with all the other journal entries. And so the purpose of the study problem is to let you see it in the context of the other journal entries, the adjusting entries, the financials, and then the closing entries. Okay, and keeping those accounts. So we do want to make sure we can pull it all together.
I see why you say it's best to go in order then.
You see why it's best to go in order?
Yeah.
Yeah, it's typically best to go in order.
Some questions are harder than others, though.
Okay, so let's see if we can get down here. Still unearned revenue quickly. That's easy, okay? Unearned revenue is easy. Do not make it hard. So we go into GameStop, and a lot of time we just cut these off by year. So where's team 3 at? Is that you, Cameron?
Present.
Yeah, that's us.
Okay. So what type of adjusting entry is this? Roman numeral 1, 2, 3, or 4?
2.
It's Roman numeral 2. And you're going to have what kind of entry? A preceding entry, correct?
Yes.
And then in the adjusting entry, what did you debit?
You said adjusting entry, what I debit?
Yeah, when you make the adjusting entry,
Unearned income.
Hmm?
Unearned income.
Okay, the liability. And what you going to credit?
Credit sales.
Okay. See, you just knocked that out, said it with authority. You hear that, Dawkins? So
I
we
heard
got
that.
we have 1,000 customers that gave us $50. Isn't that a good thing if you got some customers who give you $50?
Wish my business looked like that.
Yeah, that's the kind of business you want. So how much money is that? 50,000?
Yeah.
Yes.
So I'm gonna come up here. What year were we in?
2017.
Yeah.
So since we're in 17, I'll put some more rows in here because this would happen, okay? But now this is, so during the year, we got how much revenue?
50,000.
What we're gonna debit?
Oh, that'll be for the proceeding, that'll be cash, but for adjusting, it'll be unearned.
What you gonna credit?
Unearned income.
What kind of an account is earning income?
What's my sheet? Is a liability.
Okay. So you've gotten cash, but you haven't earned income yet
Mm-hmm.
because you haven't delivered the item. On our regular journal entry types, what type is this?
Oh, 3 or 4?
3.
Yeah, 3.
No, that's a bad guess.
4.
That's 4.
Oh.
Okay. So remember, we can always tie back to those. Now we get to the end of the year. So notice another AJE. Okay. So, and we could have had 50 of these. A company, 1,000. A company may be doing this all the time, but it's only at the end of the year. At the end of the year, what happened in this problem? What happened at the end of the year?
Unearned income would be debited.
How much did they earn it all?
No, just 45,000.
Just how much?
45,000.
Earned 45,000 of it. So notice you don't have much calculating to do. You're just going to debit unearned income of what?
You said 45.
Okay, and what you going to credit?
Sales or revenue.
Yeah, sales or revenue, 45,000. And you done. Now, how hard is that one?
Not that difficult.
Y'all made it hard. When you get the money, you debit cash and unearned income. When you deliver the goods, you debit unearned income and credit sales for the amount. So we could create T accounts and we'd have what? Earned income would have a credit of 50,000. It'd have a debit of 45. So the balance would be 5,000 in the account. Do I need to put that up or do we all have that?
I would like to see how would you put that up in the T accounts.
Okay. So we come here
Mm-hmm.
and we take out supplies now since we don't have them. We just have an unearned account now. We would have 50,000 in it. When you got the money, you credit it. Sales here. So when you make that adjusting entry, the debit the unearned account for 45,000. So now you only, when you get ready to go to the next year, you have a balance of 5,000. Then sales, and pick up this 45,000 plus the others. eventually be closed out. And eventually, this will go through close process. So very simple process. Any questions? Okay. What is our next type of closing entry?
Five? Or is it, I mean, four, sorry. So,
Three.
I'm looking at it like a three. Oh, we on three? Oh,
Accrued.
Accrued revenue. And I told you this was like what? The preceding entry is like 15. And when you collect the cash, it's like a what? A 3. So we've already been doing this. We just didn't say it, we didn't discuss it in this way. But we've already been doing this. Any questions? Well, let's look at one. So what team is up now? Don't volunteer all at once. 20. Well, let's see. Let's look at 27. J. Sharon Carr in 2017 provided 10 limousines to Chase Bank executives at a rate of $400 per vehicle for a special holiday item. So this is that entry where we made the sale on account. So this is saying the same thing. We provided them 10 limousines for $400. So we did the work. So this is sale, this is corporate sales on account, which is $4,000. This is the preceding entry. So what's that journal entry going to be?
It's gonna be accounts receivable and sales.
Okay, so we're going to come in here. So I'm just staying in 2017. So I think it's good. I'm staying in 2017.
Professor Boyd, since we're still learning right now, can we not do this attendance quiz? Because we all still learning.
Please, please.
And we only got like less than 20 minutes left in class anyway. That wouldn't even be right. We can finish learning.
Beg your pardon. How much time we got left for class?
20.
How much time
like
we got?
5.
we have approximately
Like 5.
16 minutes, which is not enough time to be doing all of this
Cameron,
stuff.
Dr. No, tell her how much time we got for class.
Not
Cameron.
to mention, I have a class at 1, so
right wouldn't be right. Perfect.
Cameron, how much time we have?
17 minutes.
Yeah.
I know you go cut it short. How much time we got, Cameron?
I just wanted to say 17, yeah.
Yeah, 17 minutes.
Yeah.
All our clocks say the same thing.
Miss Kayla, what did we say last time about class?
I thought I heard you say you was gonna start ending at 12:30. That's what I thought I heard.
That's what I wanted to hear. So I know when I got to my favorite special perfect student, she would have the right answer.
Oh, I was going by syllabus. Jeez.
What syllabus? Let me
So
get
we
my.
already 4 minutes over, is what you're saying.
Okay.
Basically.
Shoot.
Okay. So we rented those cars to the exec. So we're just going to make an entry, debit and account receivable. And we're going to credit sales. That's all. You've made this entry 1,000 times. What was the amount?
Shoot,
I don't know if
4,000.
you can go back.
4,000.
Yeah, 4,000.
4,000?
4,000.
Okay. You have made this entry a zillion times, most times getting it right. But this is the preceding entry for a type 3, Roman numeral 3 adjusting entry. Then when we collect the cash, what we're going to do? Debit cash,
Debit cash, then credit accounts receivable.
credit account received. Now, every now and then, some of you A students who didn't end up with losses will go and credit sales on this entry. There's a few of them.
You talking about the midterm?
Mm-hmm. Yeah, some people
See,
going
I
credit.
wish I knew if there was a negative number that's the correct answer at the time. I would got it correct.
You wouldn't have done that then. So you did that. So okay, so this is all this entry is, which you have made plenty of times before. So it's an adjusting entry. Now we do it all the time, but it's especially we do it at the end of the year too. But we'll call an adjusting entry at the end of the year, but we have to get it in the year that the work was done. And so I don't think we need to do these T accounts, do we? You've seen receivables and
No, we good on T accounts.
okay. Okay. So nothing special about this. You've seen this, enough times in terms of debit account receivable, credit sale, the debit cash and credit account receivable. Okay. Let's move now to some accrued expenses. And you can see these are kind of like these accrued revenues. Expenses are understated, so we got to debit expenses and credit liabilities. We don't have certain liabilities on the books. So there have been certain expenses that we have incurred, and we owe somebody. That's a liability. So we debit an expense and credit a liability. There's going to be a subsequent entry where cash is involved, but right now it's not cash is involved. And we said that when we were dealing with fours, the accounts involved are what? Salaries payable and other accrued liabilities. And the expenses involved are what? Sales salaries, office salaries, interest expense. So some combination of those will be involved. Okay, so that's number 4. So let's see if we can find one in here. Okay, so we have this calendar in here. I think we're paying the workers every Friday $1,000 a week. Okay. So when December 31st gets here in 2017, we've made these regular entries, but now we got 2 more days. The workers won't be paid until January 18th, but we've got to put these 2 days in. The expense has occurred. We got to put this in the expense account and then create the liability to accrue it with an adjusting entry. So let's look at 35. JHJ pays its employees weekly $5,000 on a 5-day work week. So every day on Friday, well, every week on Friday, they're paying $5,000. This Friday, this Friday, this Friday, this Friday. And so if we go up here to our journal entries, you're told to, okay, and we're in 2017. So let's put some more lines in here for 2017. And the first thing we're going to put in here is just the regular 27 entry to pay the payroll that last Friday. So we're going to, and this is not a preceding entry, anything, this is just a regular entry. We're going to debit salary, expense, and we're going to credit cash. And this is an entry that we make each week.
First of all,
Yes.
since you on one of the problems from group 4, I had a question about that actually. Because when we were trying to do it, you realize on your chart of accounts, you know, we just use office salary expense because that seemed like the most fitting one, but there's not one that just says salary expense.
You're right. So let's make it office.
So were we correct in doing that, or?
Yes, because in actual practice, we would know. In actual practice, you probably have that for both sets of employees. Okay. So people working, salesmen are working, office people are working on that Monday and Tuesday. Okay. So we just do the office salaries. So that's a good point. But you got both sets of people working. So this is just a regular type what? Now.
Sorry, it's the type.
It's type 9.
Yeah, that. Sorry.
Okay.
So Professor Boyd, when for the, you know how we just did the one with the accounts receivable and sales for the adjusting entries. I know you were talking about before when we were doing type 1s, those don't require a cash account or whatever because they're expenses. So when they're subsequent accounts, that's when you use like a cash or accounts receivable thing. Okay.
Correct.
Okay.
Typically cash. So cash can be in the preceding entry or the succeeding entry, but it can't be in the adjusting entry.
Okay.
So we're paying these workers $1,000 a day. They work 2 days, but they don't get paid in 2017. So to close out 2017, we got the debit office salary expense. And we're gonna credit what? Credit cash.
Oh, for this one, I thought we weren't crediting cash.
Well,
I thought we were crediting like well, I guess if it's a salary expense, then
Wait, is this the adjusting entry? Because we have salaries payable.
Yeah.
I was just talking, just see if y'all listening and going to speak up.
Yeah, salaries payable, $2,000.
Okay. So this is the adjusting entry. So not only did we pick up the $5,000 for the full week as an expense, we also picked up the $2,000. Okay, we picked up the $2,000 for the partial week. So that's going to be in the expense account, the 5 and the 2. Now, let's get into 2018. So when we get into 2018, we can go back to our calendar for a second. What's going to happen on January 3rd?
On January 3rd, we have to bring forth the balance from 2017 along with the 3 days from 2018 and pay
How
out
much do the workers want on January 3rd?
$5,000.
They want $5,000. Okay, so as we get ready to make this entry, since the workers would be upset as we get into 2018 for that subsequent entry. I guess I already have it here. We got the debit salary expense for 2,000, accrued salary payable for the 2,000.
Wait, why did you put accrued? Is that what's supposed to be there, accrued, or is that just?
I think I just put it in here. Let me take that out. It is accrued.
Well, yeah, but just going by the chart of accounts that I have, that's all.
Go with the chart of accounts. Okay. So, and this is office salary. I'm just on a. So when we make that adjustment entry, when we come in there for that first pay period, we have to debit accrued salary. So the expense portion of the 5,000 is only 3,000. So 2,000 of the expense is in 2017. The other, then 3,000 of it is going to be in 2018. And then as we continue to move now, we go back, debit salary expense, credit cash 5,000, debit salary expense, credit cash 5,000. We will continue doing that in 2018 until we got to the last week. Any questions? Any comment?
Actually, yeah, I do have a question. Is this gonna be on YouTube after this class?
Yes, it's going to be on YouTube.
Okay, thank you.
Anything else? Okay. What we would do is, as we go through 4, it's typically difficult for you to concentrate on all 4. So we're going to do them in stages. Today, working with supplies expense. We're going to work with supplies expense to make the adjusting entry today. Okay? Then on next class period we meet, no matter what we're covering, we will do prepaid insurance and we'll do unearned incomes. I'm letting you know right now, make your notes. So you'll have an attendance quiz where we move to another adjusting entry. We'll do prepaid, then we'll do unearned. So it'll be prepaid insurance. Then after that, we go do an accumulate depreciation one, a long-term asset, and we do an accrued liability. And then finally, we'll come back and do an accrued salary payable. So you only have to work on one per, kind of one, maybe two each time, rather than them all at once. So we won't strain your brain too much to be able to do 4. And today, you just got to be able to do supplies expense. Okay.
What you mean today? Ain't today over?
Not for Kayla Williams, and she had me on the other day, and
Okay, but no, seriously, I have a question because I don't like being confused, and Thursday is
don't
2
be
days away.
confused. Get unconfused. What's your confusion?
About whatever assignment you have due for Thursday, because I don't have an email from you unless you ain't emailed it yet.
I thought I emailed it. Anybody get an email?
I did.
So I got an email, but that's the email I was telling you that you were saying that it was like a template, that there weren't actually any questions.
Yeah, I'll resend it. Did anybody get an email with questions or problem on it?
I did.
I don't have nothing from Professor Boyd or Accounting 231 or nothing.
Okay, now this would be, this is just like when I sent out an exam, so it'd be through Blackboard in TSU email. So Dawkins won't have it.
Ow.
But yeah, I'm looking at my TSU email right now. I don't have nothing. So I was like, I don't want to be caught not having
You got it
nothing.
now? You got it now,
And
Williams?
refreshing.
You sent it to me too.
No.
Do you want it? Sure.
Can you just like put this on Blackboard or something? Because obviously your emails don't be hitting on time because I still don't have it.
Okay, well, what you do is this. If you don't have your test, your problem, and you're supposed to have one, you email me, then I'll email it back to you.
Okay. And whatever is on that email, you want it done and submitted through Blackboard by Thursday?
No, Dawkins. Tuesday
William,
next.
see how you could see. I know me and Dr. Listen.
Let's see.
I don't want any excuses about you to have enough time.
Dang.
I don't want any excuse about you to have enough time and you couldn't get it in the Blackboard and you couldn't get it in there right. But you only gonna have one time, Dawkins.
Wow. You know what? But things happen, life happens sometimes,
Okay, so what do you
That's my excuse
get
last
it,
class.
do it, and then have it for when you want it, or like, are we emailing it back to you? I just need to know exactly what to do.
It's gonna be an assignment. So it'll come back in as an assignment on Tuesday.
Okay, so get it and do it and have it turned in on Tuesday as an assignment.
Right. You got that? Dick. Who's that? Rand? Who's that? Randa Dixon. Is that Rand always give me trouble?
I don't know. Just get you trouble.
Not you getting everybody's name wrong.
Right.
Right.
Have a conversation.
Right.
Clearly, it's on the screen.
But y'all gotta get those things to be right. Got me on Saturday morning working, just working.
Mm-mm.
So for everybody that's not doing the midterm next class, what we doing?
Working on the problem because I don't want any excuses why you didn't get it completed right.
Okay, got it.
How do y'all have it?
So don't come here. I'm not gonna be here.
You're not gonna be here.
Okay.
Okay, so we're not going to
I don't want to see y'all. I don't want to see y'all.
assignment.
I like
Okay,
y'all, but I
good.
don't want to see y'all on Thursday.
Okay.
Y'all working on your own. Now, the different versions of the problem. I don't want to see any crazy and wrong answers. There can be one right answer, but there's no wrong. But there are a bunch of versions. And you better off putting in, something reasonable. Like a bunch of you all on your exam had beginning retained earnings is $640,000. And so you shouldn't ask somebody for something like that, and they tell you something crazy.
That doesn't sound right.
It had $640,000 for the beginning retained earnings on the statement of retained earnings, which is nowhere in the problem.
You say
So all
no.
y'all $640,000 people, not me looking at it. All right, let's look at this attendance quiz right quick.
Oh man. I think I done grew like 5 more gray hairs messing with Professor Voigt this semester. I ain't playing.
Only 5? Shoot.
Only 5. But, hey,
5
the
hairs.
class ain't over
I done
yet.
lost 5 pounds. I done lost weight stressing out.
Well, that's what I got to learn how to do. Cameron didn't help me. See, I'm gaining weight just sitting here.
See, we losing weight. We're losing weight.
You're calling out everybody today.
Hey, stressing us out, man. What?
All right, here it
Wait,
is.
so we have an attendance quiz right now?
It is.
What if we don't have
This a
time to do
joke,
the
right?
attendance
Wait, are we
quiz?
having the test?
Wait a second.
Because
I have
I gotta
class at
go.
1.
I gotta
Oh,
go.
no, wait, actually,
Y'all,
this.
y'all need to look. I guess some of y'all don't. Here it is.
Wait, are we having the
How
test?
do you submit it?
This is practice today.
I think all quizzes and exams should be like this.
So
Multiple
how do
choice.
we turn it in?
It says practice
This
today.
practice.
You got to turn it in.
Oh, this is just practice.
It's practice today.
Okay.
Oh, okay.
Don't do nothing crazy now.
Oh yeah, y'all be sure to go vote today. It's early voting on campus, so definitely go vote, y'all.
Yes, go vote. Now give me the answer to this. Y'all running out of y'all 2 minutes.
Oh, we supposed to give you the answer on here?
Have y'all? Let's see.
Yeah.
Put your answer in the chat. So put your answer in the chat. We'll be doing new things here. Put your answer in the chat.